Alrighty, so this video is going to be on how to put together and present the short-term medical products using the software, and then the way I present and I talk to clients. This video will be about 5 to 10 minutes long, and so let's get started. So when you're in the back office, you're just going to go to quoting and applications. You're going to go instant quote, and I'm going to use Arizona as my example. So I'm going to put a zip code 85, let's go 014. And I'm going to use myself and my wife. And we're just going to say 1/1/1989. And for myself, we're going to say 1993. So the height weight scales right here on the right, I typically don't really look at that a bunch. Once you type in all the information, and obviously when you put you can put the kids in too, you're gonna see the different level of products here. So you'll see the tri-term, the short-term plans, the protector guards, health protector guards, guard plan. You have dental, vision, accident, critical illness, so on and so forth. The fixed indemnity policies as well for hospitalization. I really don't touch anything below the STM line, to be honest with you. Dental and vision, I feel like Apex is a much better product, or I feel like Emeritus is a much better product at the moment. So they're better price-wise and coverage-wise for the client. So, and the commission's better too. Like it's almost all. It's a better across the board in my opinion. So, and then the HPGs are going to be like your fixed indemnity products. Again, I'm not really going to write these because I don't want to put someone in a position where they only have 20 grand for a surgery. I'll do another video on tri-term, but I do a lot of short-term medicals, and here's why. And the reason they call them is because you can set the length of the term anywhere from 1 month to 12 months. I always do 12 months unless the state requires 6 months, or unless someone really wants to save money and they're like, hey, I might go and get a new job soon. The 6 month is less money than the 12 month, but I don't want to put someone in that position where they're renewing every 6 months. So, unless I have to, right? So there's three main ones that I use when I present. I'm going to touch on these other ones here in a second as well, but the three main ones I use is Value, Plus Elite, and Medical Plus. The Premier Elite is going to be a shared deductible. Basically, the whole family can share it. It's a great option if someone doesn't mind spending an extra $100, and then you've got 3 kids. So you have a family of 5 sharing a $5,000 deductible. You know, they're $1,200 a person, basically. The copay plan I use when someone really wants their copays, but the max out of pocket is an additional $5,000 flat on top of the deductible just to have a copay, and you pay a lot more money. So aesthetically, I present these three because they're going to line up in a specific way, but also because, in my opinion, the copay plan really doesn't make a whole ton of sense to give to someone. And I'll show it if someone really wants their copay, but it's, you have limited benefits. You can go look at it. I just don't think it's worth it all that often. The people you should be putting on here are relatively healthy. People that might only go to the doctor once a year, people that are concerned about accidents or heart attack or stroke. They're not on 5 or 6 medications, and they're not trying to go to the doctor every second they can. So when I'll screen share with people, and I'll show people, and this is what I do every time to start. I'll put it at 5,000 on across the board for deductible, and I'll put the term limit at 12 months, and then I'll set their start date. And the reason why the start date's important to set here, and I'll ask through qualifying, is because if the insurance companies are raising their rates, it will reflect. And the last thing you want to do is be like, have today's date on there for the tomorrow, and then you're like, oh, wait a minute, you want it to start February 1st, or you want it to start March 1st? Well, I forgot to tell you the rates are going up by $40. So always have it set on the date. And a little hack real quick is you could set it on 1 day prior to that. And then, of course, you don't get the rate increase. A little hack to get around it. But anyways, so let's say we're going to have a February 1st start date. And then I go to the bottom, and I'm going to have the accident supplements reflect the deductible, or the deductible and the max out of pocket. So The elite, the plus elite, is always going to have. I start, like I said, I start at the 5,000. So you have the $5,000 deductible. The co-insurance for the elite plus is always 100-0. So I'm going to have it 5K. This on the medical plus is 80-20, and the max out of pocket is an additional 2,000. And then on the value, it's 70-30, and the additional max out of pocket is 10 grand. So you'll see right here what I'm talking about. So this on private plans, it's always the deductible plus the max out of pocket. Government does not work the same. So again, I put the accident supplement 5 grand for this one because there's no additional max out of pocket. 7,500 for this one because it's 7 grand, and then 15,000 for this on the value plan. Now, when I start having the conversation with someone, here's what I say. I say the most common plan I use is this one right here. It's a $500 plan. There could be a $10 surcharge on the back end via the state. It just depends. And the software's been a little funky, so if I click off the page, I gotta get it fixed. Give me 1 second here. If the prices don't look like they're reflecting properly, just go in and adjust the deductible, and it'll fix all of this here. So on this, it's very, very simple. Doctor visits are subject to the deductible, which is great because, yes, you don't have a copay, but copays don't apply to a deductible. So the way I say it is, hey, look, so-and-so, if you go to the doctor, they may charge you $200. You're going to get the contracted rate. They're probably going to discount it by 50%. You'll end up paying $100. It'll go to the deductible. The wellness is free for mammograms and pap smears. Go look at the exclusions to double check that they make sure they don't change them. But the last time I checked, those two things are included, but the wellness and colonoscopies are not included. The physical is not included. So, and I say to people, I said, look, the biggest two complaints I have about this from people is, one, there's no doctor copay because people are used to that. And number two, the wellness isn't free, but it goes to your deductible. And they go, oh, okay, that makes sense. And so I'll say, hey, look, it's going to be $480 a month. Unlimited urgent care copays for $50, and the copay for prescription is $25 for generic. I typically tell people to go to GoodRx because you can get like atorvastatin, the high blood pressure, thyroid medication for $10 there. Your deductible's 5 grand. After you meet that, it's 100% covered. And then, of course, I always have an accident rider. So if you have any type of injury, you're not going to have to pay anything. So there's two categories in which insurance bills in. You have health, or sickness and disease, and you have accident injury. Accident injury makes up 80% of all claims, and it's all done in coding. So what I say to people is when they might say, well, that's a large deductible, or they're trying to go, should I do 5,000 or 7,500? I'll always remind them, look, if you have an injury of any type, you're not going to pay anything. You might have to pay some at the doctor's, but you'll get reimbursed that money because the rider kicks in. But the only time the deductible really applies is if you're going to the doctor, or if you have like a heart attack, cancer, stroke, or you go to the emergency room because you're having appendicitis, or things of that nature that are not directly related to like cutting your hand open with a knife, or breaking your ankle, or breaking your foot, or breaking a rib, or getting an x-ray or an MRI because you injured something. So an ACL, I have a buddy of mine who got an ACL surgery. He paid $0 for it. So again, I'll tell people, look, at the two biggest complaints is a physical is not free and doctor visits are subject to the deductible. Blood works the same way, but guess what? Most government plans are like that anyways. So, and then I'll say, look, you can do value, but I don't have many clients on this. It's usually the people who have a lot of money who just want to try to save as much as they can. They've never been sick their entire life. And then the middle one, I put it up here for context, but usually the price discrepancy of, what is it? $12. $12 a month is not worth having an extra $2,000 in max out of pocket. So that's how I explain it to people. This is how I typically present it. The biggest objection I might get, or the concern I get, is, again, people go, well, it's short-term medical. I'm like, no. I can always renew you unless you've had like a heart attack, cancer, stroke. If you have a major injury, obviously it's a one-time thing. I can get you re-enrolled. It's not a big deal. The reason they call it short-term medical is because it can be as low as 1 month and as long as 12. But all health insurance policies that are like normal coverage have a 12 12-month benefit period. And so 99 out of 100 times that dissolves that concern or that issue. And I go, look, all I do is I'm going to put you on this. I'm going to call you back in 11 months and I'm going to re-enroll you on this plan. And the rate may go up, 5% or 3%, but mostly it's because of you gotten a year older. So this is how I do these, and I almost exclusively do this product because I want to stay in front of my clients. I want to stay connected to them. I want them to know I take care of them. And it's like any normal 12-month policy. Even at your work, you have to re-enroll every single 12 months. And the only time I really haven't gotten someone to be re-enrolled was if they had a ongoing disease. Like I had a client have a internal shoulder, degenerative shoulder disease. And she had racked up $200,000 in medical bills. And again, it's a disease. She paid $5,000. That was it. Everything was covered. And the disease, because it's ongoing, I couldn't put her back on this. And she understood that and was okay with it. She was also going to the Mayo Clinic. Now, the last thing I'll touch on is these are value is $1 million in maximum lifetime coverage. The other two are $2 million. That's more than enough. And that's not including contracted rates. So let's say someone gets $3 million in medical bills. It's going to get contracted down to like 1.2, 1.5 million. It's still enough to cover that. So everybody, for the most part, is going to be perfectly taken care of on this. Make sure to go check the brochure out and check out the exclusions if there are any, if they've changed. Take a look at the quick underwriting questions. And also, what may be included or not included in wellness. That is always subject to change. But that's how I present this product. And really, it's not I'm trying to sell them or close them on it. It's like, hey, here's an option, or here's here's the 3 options that I think are good. I can pull up some Aetna options. I can pull up some government options. Which one do you like the most? This is not about me selling. This is about me trying to find a solution to what they think will solve their problem. Hope this helps. Bye-bye.